Okay, let's go.
A perfect technical setup and strict risk management won't save you from eventually blowing your account completely. Most traders react to this failure by obsessing over external factors. They tweak chart patterns, swap platforms, and demand predictability from a system that is inherently unpredictable. As funding Pips approaches its 3-year anniversary, analyzing countless traders has revealed a consistent truth. Traders rarely fail because their system is broken. Failure occurs when the volume of a trader's internal emotional response overpowers the structural logic of the system. The market acts as a mirror, bypassing your strategy to expose your raw psychology, your impatience, your ego, and your fear. Searching for a new technical strategy is useless until you acknowledge that you first have to fix the psychological flaws reflecting back at you. Over the past 3 years, the trading industry has been defined by volatility, shifting rules, platform migrations, and erratic market trends. This environment creates a psychological trap. Inexperienced traders demand instant rewards and perfect clarity from a market that owes them neither. Survival requires a shift in mindset, moving from the demand for rigid certainty to the development of fluid adaptability. Managing a multi-million-dollar prop firm involves the same relationship with chaos as managing a personal account. Uncertainty is a mandatory training ground, not a threat. Long-term success belongs to those who stop trying to predict the storm and instead master the ability to navigate through it calmly. Longevity in the markets doesn't require aggressive action, bigger trades, or constant high-energy motivation. This chart highlights quiet alpha, the mathematical advantage gained by maximizing boredom tolerance, suppressing impatience, and strictly managing risk. This form of self-control creates an invisible operational shield, prioritizing structural execution over daily emotional whims. Executing the vision, even on unmotivated days, is precisely how funding Pips scaled over the last 3 years, without relying on hype or luck. True discipline is the ultimate strategic edge, because it protects your single most important asset, your longevity in the market. Solitary trading is intensely isolating, forcing you to absorb every single frustrating loss and psychological pressure entirely alone. Trading is a psychological battle, and fighting that battle in total isolation significantly lowers the survival rate. A community provides a multiplier effect. Shared breakthroughs, collective accountability, and the feeling of being understood act as structural redundancies for your mindset. Isolated traders rely on finite, exhaustible willpower. Network traders rely on a support system that makes them exponentially harder to break under pressure. These pillars reveal the final thesis. Passing a challenge or surviving a market shift is the practice of managing oneself